right. Hey everyone, welcome in. Welcome guys to the live stream. I'm seeing some people coming in. Um, yeah, that's great. So we will start talking about our topic tonight. Tonight we're gonna be doing something quite different. Um, it will be, or it's gonna be a little bit different than what we have done last week. So if you ever open up your chart or loaded up your chart and it is covered in many different indicators, EMAs, RSI, MACD, Bollinger Bands, stochastic oscillator, CCI, and many different indicators, maybe 5 to 6 different indicators, or even 8 different indicators, all fighting for a space within your chart or in your chart, and you still don't know what to actually do. Tonight is actually for you, all of you guys. Okay, so what we're going to be doing, or what we're going to be talking about tonight, is how you can actually trade without those indicators, or without stacking all of those indicators in your chart. And so that is why we're calling this live stream tonight Naked Chart Mastery, because the idea is simple. Price on its own already tells you absolutely everything, not absolutely everything, but price had already tell you everything you need to know in the chart or within the chart. So you don't need any indicator, or you don't need any indicator tags, or no indicator tags is required for you to actually know or read the chart itself. So that's what we're going to be talking about tonight, and I'm going to show you how you can trade in the market and how you can read the market, or how you can even read the chart without any single indicator. So by the end of this live stream, you will be able to look at the chart on your own, with your own eyes, open up your chart, look at the market, and read the chart like you are reading a map. Okay, so welcome guys. I've seen a lot of you guys coming in, so let's continue. So that's why we have this topic, or this title. It is called Naked Chart Mastery. So let's go to our first topic actually. Okay guys, so I hope you guys can actually see everything. Welcome guys. Yeah, so this is the next. So we're going to talk about the biggest mistakes, or some of the biggest mistakes traders actually make. So when you look at the, you can look at this left. Okay, when you look at the left side of the image first, this is what most retail traders, or most retail traders chart actually looks like. So when you open the chart, or when you open the market, or when you saw their chart, you can see many different indicators, like 6 different indicators, all stacked on top of each other. But I want to be honest with you guys, or just be honest with yourselves in the chat. How many of you have chart similar to this, or how many of you stack many different indicators in your chart, or when you are trading, to actually figure out what's going to happen in the market? Sometimes there's nothing wrong with that, depending on what strategy you are actually using. But here's the actual problem with that kind of strategy. If you are not a professional trader, or if you're not really familiar with the market, that will be a very difficult thing for you to do, because every one of those indicators is actually lagging. Okay, they are all, almost most of them are lagging calculations, if you would. So here's what I mean by that. RSI is doing math on the last 14 candles. MACD is comparing two moving averages, which which are themselves read something from the past. So none of them actually know anything you couldn't already see by just looking at the price, by just looking at the market. None of those indicators will tell you anything that you cannot see by just looking at the market. For example, if I write something in your screen and you just look at the screen, you can know what is written in that screen by just looking at that screen. And so it is something like that. None of those indicators can tell you anything because they are reading the past and then predicting the future. So they will read the past and tell you what's going to happen in the future. But by looking at the chart yourself, if you know how to read the market or how to actually read the chart, by looking at the price, by just looking at the price, you will know what happened and you will be able to understand it, or you'll be able to read the chart like you are reading a map. So instead of clarity, you end up getting 5 different opinions or 5 different options, which are all disagreeing with each other sometimes, most of the times. And that's what happened. You end up freezing, or most traders, that is when many traders are going to panic. And then you either end up executing the trade without conviction, or you end up, not taking the trade at all because you're afraid, you don't know what's going to happen, and sometimes you might be right actually. So I just want to give you an example of what I mean here. Yeah, absolutely, that's what I mean. And so someone here in the chat is actually saying what I was already explaining to you guys. And so I just want you to stay absolutely focused through the end of the stream, because by the end of this live stream today, my goal is to make sure that I equipped you, all of you guys, is to make sure that all of you, by the end of this live stream, you know how to read the chart by just looking at the market, by just looking at the chart. You can read the chart and see and know what's going to happen without using any indicator. And then later on, it's going to be up to you to add some indicators or any other indicator to sort of help you make a better trading decision. But today, the most important thing is to make sure that you know how to read the chart. Okay, so that's what we're going to be doing. I'm just giving you an example, but this guy has already backed my example because that's what I'm trying to say. Sometimes you will have RSI saying it is oversold, it is time for you to buy, while your MACD actually just gave you maybe a bearish crossover and price is sitting right on a support level. So you don't know what actually choose. When you have a situation like that, you can tell me here in the chat, which one do you trust when you have that many different indicators? Because that's exactly when most traders end up panicking and either do nothing or take the trade with absolutely zero conviction. And so so we're going to continue talking about that. Yeah. Now we will go back to the next screen. Now I want you to take your eyes off the left screen and then look at the right screen. But before that, I want to show you my chart so that you can see what I mean. So yeah, here we go. So we're gonna go to the chart so that okay, so you guys can understand what I mean by looking at the chart. Now you can see we have many different indicators, many confusing indicators. And so if you are a beginner or you are new here and you just look at this chart, some of you might tell me, what do you understand here by looking at the chart? I myself can tell what might happen, but the problem is that if you are a beginner or sometimes even if you're a professional trader, when you have that many different indicators telling you many different things, it is sometimes confusing. So, but I'm just trying to show you right here. You can see we have many different indicators. We have parabolic SAR, we have RSI, we have stochastic oscillator, we have Bollinger Bands as well, we have fractal indicators, we have moving averages. So we have many different indicators, and each of those indicators are actually telling us something different. So that is what I mean exactly by explaining the left screen. So I think now we're gonna get back to the screen, and then I want you to actually focus on the second screen, of course. Now the right side, it is same market, same candle, same moment. Everything is the same, but the price is the only difference. And what's the difference? The chart is actually actually cleaner. It is absolutely clean. Nothing is hidden. Nothing is actually contradicting itself, because there aren't that many indicators conflicting themselves. And so that's the whole shift we're going to be making tonight. Okay, we're going to be focusing on less noise to make better decisions, or much better trading decisions. Yeah, so the market already tells the story, but you're just going to have to stop covering it up with those indicators and start actually reading the chart much more cleaner or cleanly. So now I'm going to go back to the chart actually to sort of show you what I mean. So we're going to get back to the chart by cleaning up the chart. Here we go. So now you can look at the screen, or you can look at the chart, and you can see now we have a very clean chart. And now nothing is actually contradicting itself. We can just look at the chart, and if we can be able to read the chart by just looking at the chart like this, that would be much better thing for us to do without confusing ourselves. And that is the goal tonight, and that is what I will be showing you tonight. And so this is just the example of the most the chaotic market, or the chaotic chart, and the clean simple chart. And so this is the cleaner chart, just as I show you in those two different images. But we're going to get back to the images right now. So that is the example. Okay, I only prepare two indicators on my chart, a learning price action. That is remarkable, and that's exactly what we're talking about. And so we're gonna get into price action later in the live stream. So we're gonna go to the next. Yeah. Now we're gonna be talking about the market trends. Okay. So or the market structure actually. So this is the foundation for literally everything else we're going to be talking tonight. But what I want you to do is I want you to go slow on your own chart, not to sort of be fast while focusing on the market structure, or while looking at the market structure. But this is actually the foundation. An uptrend is nothing more than a sequence. I want you to focus on the image on your screen. But before that, we're going to be showing you something. I know a lot of you guys have joined today, and before you join, we have made a promise to give you the $5 risk-free code. And so we will open the code right now so that some of you can take the code. But it is actually for the first 50 people. So the first 50 people that actually use the code are the ones that are going to get in the $5 risk-free code. Okay, so here we go. Okay, guys, coming off with the code. Get ready. Yeah. So I hope you can all see the code right here. So this is the $5 risk-free code. Okay, here's the code. But guys, you have to stay in the live stream because we're just beginning right now. We have a lot of very important information to discuss in this live stream. So don't just leave the live stream and go try using the code. You can keep the code for later. And yeah, thank you guys. We have actually fixed those problems, and nice to hear that. So here's the code. I hope you are all seeing the code. This is the $5 risk-free code we have promised you, but it is actually for the first 50 people. The first 50 users that use it are the ones that are gonna get this $5 risk-free code. But don't leave the live stream and focus on using the code. If you can do both at the same time, that would be fine. But it is better for you guys to, yeah, awesome. So it is better for you guys to stay and watch because this is gonna help you. There is enormous and tremendous information in this live stream tonight. And so it is very important for you guys to stay through the end of the live stream, not just take the code, because the point is if you take the code and then go in to apply it in your whatever, you go to use the code and you just leave the live stream, and there are many important informations that were shared while you are not available. You might go and use the code but lose the trade or lose the code. But if you stay here, you have the code and you have the knowledge. Now, if you combine both of those things, it would be tremendously beneficial to you. And so I recommend you guys to actually stay through the end of the live stream. So as I am saying, we are now talking about the market structure. Okay, so I want you to focus on the uptrend in the left side of the image, the left side. Okay, an uptrend is nothing more than a sequence which tell you higher highs, which you have two more candles or green candles or bullish candles going up at the same time, or you have higher lows. So it is about higher highs and higher lows. So what we mean by that is when price pushes up to a new peak, but then pulls back, but that pullback hold above the previous low, and then push to an even higher peak. As long as that pattern continue, you are in an uptrend. That's clearly, awesome. Okay, so that's the code. But I just want you guys to stay focused on what we are talking about here. Okay, so as long as that pattern continue in an uptrend, that's all you need. You now have an uptrend. You don't need a moving average to actually tell you that. You don't need an MACD line or even a Bollinger Bands to actually tell you that. You can see that with your eyes, and you don't need any indicator to actually tell you that now you have an uptrend. Okay, but then a downtrend is the exact mirror of what I just explained to you: lower highs and lower lows. Okay, so every bounce falls below the last peak, and also every low undercut the previous low, or sort of the previous candle. So it is just the reverse of what we actually explained in an uptrend. Okay, maybe we should have an example, but we're going to get into the chart right now to get an example of an uptrend and a downtrend. Okay, but just to sort of give you an example, let's say a price rallies from 100 to 120. Maybe let's say you have a Bitcoin price, for example, rallying from $100, for example, to $120. That is your first high. Okay, but then it pulls back to, let's say, 110. From 120, which is the peak, then it pulls back to 110. That is your first low. Okay, and then it rallies again to 130. That is a higher high, and it is higher than the previous peak, which is 120. Okay, I hope you guys are understanding that. So, but then it also pulls back to, let's say, 115. Instead, that second pullback, let's say, drops to from 115 to 105, for example, $105. That is below your first low of 110. And so that is your structure breaking. and that is the market exactly telling you the uptrend may be over, because your peak is 130, and from there you begin to have the pullback, and it doesn't go back. Okay, so then the market or the chart is actually telling you the uptrend may be over, and so before any indicator will even react, you have seen that with your own eyes, and you've witnessed that with your own eyes, and you can tell yourself this is going to be, there's going to be a reversal here, or the uptrend is about to be over, and that is because before any indicator that you are using tells you or tells you what's happened. And that is the same thing with the what we're talking about with the downtrend, of course. So we're gonna get into the chart and then show you. Let's find an uptrend and then move forward to our next support or resistance level, of course. So yeah, all right. So let's try and find an uptrend. Awesome. I think right here. So let's use some of these tools. Okay, guys, I'm trying to actually show you what an uptrend and a downward trend actually looks like. So let's say we have, you know, the entry around here, that is 112. Okay, then the market continue to break from 112 to 112, or actually from 141 to 0.1401. Okay, and then from here we have another breakthrough to 112.596, and then from there it began to reverse into a downtrend. Oh my god, what do we have here? Seems to be happening. Okay, guys, I hope you're all with me here. So I guess, yeah. So when you look at the chart right here, then the market begin to pull back. This is not the best example to show you, but because we are moving fast, because we didn't have enough time to actually go into many different assets to find an uptrend and a downtrend, and to show you, just to actually be clear that you guys have understand. But you can tell me in the comment section or in the chat. Uh, but here we are. So when you look at the market right here, we have the uptrend starting from here all the way to here, and then reversal from here down here. Okay, and right here, after this candle, we might be able to decide what's going to happen here. Either this is going to be an uptrend, or if this is going to be a downtrend. But we have the first breakthrough right here. But that being said, because we didn't have enough time to actually go back, but we could have find many better examples. But I hope you guys understand with this simple example. So we're going to go to the next chapter of this live stream, where we're going to talk about actually support and resistance level, of course. Okay, guys, this is going to be exciting. Nice to hear that. Well, exactly, because we didn't have enough time to actually get the best the best of the examples, because we didn't have much time, but still we might be able to go back to the market, because we have to claim all of these new assets for us to find what we need, and we're gonna actually be wasting a lot of time in finding that. That's why we have these images, which you guys can be able to use let's get back to the last image to actually be very clear. So when you look at the downtrend, exactly as just like we explained the uptrend, it's just a vice versa. It's just the reversal of what we actually yeah, of course. So we will talk about the breakout. Yeah, but I guess we're not gonna. We have actually 40 minutes to finish the live stream. So we'll keep the Q&A section through the end of the live stream so that we will make sure that we cover absolutely everything, and then we can come back if we have enough time for the examples. We're going to get into the trade and even try to take some trades. But yeah, that would be the best thing to do. But I just want you to look at the image again, and then we're going to move next. So now we're going to talk about the support and resistance level first. Yeah, exactly. But I'll just tell you guys to focus on the live stream right now, then focusing on taking trades so that you would have far more information or enough information to make a better trading decision when you get back to the chart. But I think splitting your attention between the chart, between the market and the live stream, I think that would be confusing, and it might not result in a better trading decision for you guys. So it's either you focus on the trading or you focus on the live stream. And right now, I'll just suggest to focus on the live stream so that you would acquire enough information and get as much information as possible before we actually close or finish the live stream. So now we're gonna be talking about support and resistance level. Sorry, guys. I have some issue with the lighting here, but I think that doesn't matter at all. That's great. Wow, that is amazing. But I hope you guys are still here with me. That's great. So let's get back to the market support and resistance level, of course. Here we are. Now, guys, let's talk about these levels. Okay, uh, you just put your eyes on what I show here, the resistance and the support level. You can. I just want you to take the resistance level as you sort of your ceiling. When if you are sitting right now in your room, just think of the think of the resistance level as your ceiling, and then think of the support level as your floor. Okay, I just want you to put that in your mind to better understand these lines and what they represent. Okay, so support is a zone where buyers keep stepping in. That is the period where buyers begin to come in to the market and stopping price from falling further down. Okay, because as soon as buyers begin to come in, the market will become bullish, or the market will tend to be bullish, and that will prevent the market from falling. Or if the market is already falling, that will prevent the market from falling further down, and then the market will begin to recover and move in a bullish direction or in a upward direction. And so I just want you to think of the support level, just as I said, as your floor, because I would explain more on that. But then the resistance level or the ceiling is the opposite. Resistance level, or the ceiling, your ceiling is where the sellers keep showing up and capping the advance of the market, or sort of cutting short the advance of the market. So while the market is bullish, or the market is in a bullish mode, or while the market is going up, That is when the sellers comes in and said, enough is enough. You guys, we are going down, and then they began to sort of sell or push the price down, um, and hold, if they hold their position, push the price further down. So sometimes you have indicators, especially RSI, to actually tell you how strong the buyers really are and how strong the sellers really are. And also sometimes to determine whether the market hit a support level or a resistance level. Sorry, guys. But the point here is, by just looking at the chart with your own eyes, you can be able to determine whether the price has already hit a support level or a resistance level. And that is what we are going to do. But then to give another example, I just want you to sort of imagine the price has bounced up from $1 three separate times over the last 2 days, for example. Okay, each time it get close, the buyers step in and actually rallies it back up. Okay, let's say after that level, okay, after the first level that the market hit, for example, the I don't know, sorry guys. So when the buyer steps in and rallies the market to back it up or to sort of push the price back, that level isn't magic. Okay, it is just that everyone watching the chart, the traders, whatever, humans or whatever, even algorithms, whoever is watching the chart, including indicators, remembers what happened there the very last time. And then you places your orders, or they places their orders accordingly, according to what the prediction would be. And that's what the market remembers. And actually that is what what do we mean? That is what we mean with the sorry guys, I'm missing the word. So just to move forward with our example, let's get a what do we call this? It's just not a mystical, okay? It is just a collective memory turned into real orders sitting at that price. So it's not like even if you're using an indicator and the indicator is showing you that same information or that same signal, the point is just that you now look at the price with your own eyes, and then you can be able to predict what happened. Because the point is, when you predict that the price, oh no, the code is actually useful everywhere. It doesn't matter where you are located in. You can use the code whether you are in Africa, Asia, or wherever you are using IQ option. So the code is not just for one region, of course. Okay, so as I was saying, it is just a collective memory turned into real orders sitting at that price. And so when the price hit the ceiling, that is the resistance level, you can predict that now the market is going to reverse, and then you can place your order at that moment. And so it just doesn't matter how long it takes. Either it takes 3 days, either it takes 2 days, either it takes 3 minutes or 5 minutes, depending on the timing you are using and depending on your strategy. You can be able to determine where the price is actually going. So that is just what we mean. And it goes the same with the support level. And when you are able to figure out or to see that the market had already reached a support level, you can know at that moment that now the market is going to reverse, and you would place a buy order because you know that buyers are coming in, and that buyers are going to hold the market and push the market up, and then you would place your order accordingly. And so that is what we mean with the support and resistance level. And so just as I said, you take support and resistance level as your ceiling and your floor. When you have your price hitting the floor, that means the buyers have already come in. They are ready to defend that section or their position and to hold their ground and also to push the price higher. And so that is a moment, or that is the point where traders place a buy order. And it goes the same with the ceiling. When the price hit the ceiling, that means it cannot go any further because the sellers have already begun to come in and they're beginning to push the market down. And so that is when the traders begin to actually place a sell orders based on what they can be able to see, based on what happened in the market, which is a reversal from an upward trend to a downward trend. And so now we're gonna move forward because we hit half of our time and we haven't covered enough of what we wanted to actually cover. But then I think time is not on our side today. So we're gonna move to breakouts and fake outs before we get into the chart and get some examples, of course. Yeah. So now we move to the next, which is real breakout versus fake breakout, or the trap, or the fake out. Let me give you a space right here so that you can be able to see this or read this code. Yeah. So I hope you guys can see the code clearly and everything here. Awesome. Yeah. So now we will talk about breakouts and fake outs. So this is where people lose real money. Because why are people losing real money here? Because people are actually chasing the wrong signal. And so let's talk about this. On the left side of the image, you can see the real breakout. And what I want you to do is to notice or to look at those, look at the left screen clearly and notice those three things. The candle actually closes beyond the level, not just the wicks through it. Okay, the candle closes beyond the level. Okay, and then there is a real momentum behind the move because the candles are strong bodied. They are not tiny candles with wicks. They are full bodied, strong candles. And critically, when price comes back to sort of retest that broken level, it holds rather than falling back through. Okay, so when you see that, that is a real breakout. So that is very important for you to actually focus on those things. The candles are not small candles. They are not just candles with wicks through it. They are big candles or strong-bodied candles. They are not tiny candles. And when you see that, it means there is a real momentum behind the move. Why? Because the candles have already showed you what happened is that we will move with in the next few minutes. We will still talk about the candlesticks, of course, but just to be clear, every candlestick you see is a fight between buyers and sellers, and during that fight, the people that prevail, the winners, are the ones that the candle actually represent. And so we usually use the red and green colors, which basically tell every trader a green color means bullish or bullish momentum, and a red color means bearish momentum or represent a bearish market or a bear market, and a green color represent the bulls market or the bullish market. And so when that fight is happening and the sellers end up winning the fight, when the sellers prevail, that is when you have a red candle. And when the buyers prevail, that is when you have a green or a bullish candle. Okay, so just to be clear, I'm just explaining to you guys so that you can understand what the candles actually represent. The candles is a war or is a fight, actually, just to be clear. maybe we're gonna find a better word to use. Thank you guys. I'm glad you are still here with me. That's amazing. But we're gonna move very fast. But so just to be clear, green candle represent bullish market. And what happened is that during that's why you see when you're looking at the chart, you can see that the candle is going up and down, up and down. And what is happening between that up and down is actually the buyers are coming in, the sellers are coming in, the buyers are pushing, and the sellers are also pushing. And so at the end of the day, if you have 1 minute candle, at the end of that 1 minute, if the buyers overwhelm the sellers, you're gonna have a green candle, and if the sellers overwhelm the buyers, you're gonna have a red candle. And so, yeah, of course, we will share the link after the live stream. Even right now, some people will share the link with the African community. Yeah, of course. But thank you, guys. So now we're gonna look at the right image. So I want you to focus your attention on the right screen, the fake out. Sometimes it is called the bull's trap or a bear trap, depending on what it represents. If you can see it clearly, you can see that it looks identical or somewhat very identical to the first second for the, what do we mean? For the first seconds, okay? We can see that the price pokes above the level, and then everyone actually get excited that now the market is going in that direction, but then people jump in because people are excited, and that's what happened with the formal market. When you have people getting excited that the market is gonna go up or the market is going up, let me jump in before the trend stop, and that is what happened when fake out is happening, and you do not stop to see what actually happened at the end. You just jump in. That is when people or when traders actually lose money. But there's no strong close. Okay, what happened is that you don't follow through the candle. Sometimes when the when that happened, the market just snaps right back inside the range. It just doesn't follow right after you jump in, and that's what happened. As soon as you place your order, you just see the market beginning to snaps right back inside the range, and that is exactly the moment when the market trap absolutely everyone who chase that take out. Okay, so guys, I'm gonna answer all your questions at the end of this live stream because we are actually running out of time and we have to keep everything in time, of course. And so we're just gonna, I think we're just gonna move to the next. We're gonna move to the candlestick right now, so that we would try and cover everything within the next. We have like 18 minutes or something, of course. But then we're gonna actually answer the questions because we have a Q&A session at the end. And so let's just try to move as fast as possible. So yeah. Awesome. Now we're gonna move to the candlesticks. So, okay. Thank you guys. But we're just gonna stay focused and try to finish cover everything in time because we still have much to cover and time is actually running out. So we're just gonna stay focused. Now we're gonna talk about candlesticks, and just as we explained candles before, I guess we didn't have to push more on that. But now I want you to look at the screen. Let's see how we can minimize so that you can see it clearly. Okay. Okay, guys, I'm trying to make sure that you can see everything and you can. Okay. Okay, I hope you can see everything now clearly. So the first thing we have bullish engulfing. And so when you look at a bullish engulfing, it is a small candle swallowed by a big red one. And when you saw that happening, when you saw a small green candle being swallowed by a very big red candle, that that is sorry guys, not bullish engulfing, of course, bearish engulfing. So I didn't push the bullish. I don't think we have the uh, let's see the next image just before we move forward so that we can be able to explain that it's not there. So it's okay. When you saw a small green candle being swallowed by a very big um, red candle, that means that the market is about to be bearish, or a bearish momentum is about to happen, because sellers had already taken total control of the market, and now the market is going to go in a downward trend, or in a downward direction, and that is bearish engulfing. But the same thing with bullish engulfing, just like you saw a small green candle being swallowed by a very big red candle, then it is the vice versa for a bullish engulfing. We just didn't put the bullish engulfing here, but what you have to do is just put it in your mind and replace the red green candle, the small green candle, with the red small candle, and then replace the big red candle with a big green candle, and then you put the small candle instead of before the red candle, then after the green candle, and that is a bullish engulfing. And when you saw a bullish engulfing happening, just like when you saw a bearish engulfing, means sellers take total control of the market. It means buyers had also taken total control of the market, and now the market is going to reverse and start going in an upward direction. And so that is a bearish and bullish engulfing. But based on what you see on the screen right now, it means that as soon as you saw, or whenever you saw a small green candle being swallowed by a very big large or red candle, that means a bearish engulfing. And what bearish engulfing actually means is that it is actually telling you that sellers had already taken total control of the market at that moment, and now the market will begin to move in a downward direction, and you can place a sell order based on what you saw, and it means the market will go into a downward trend, or in a downward direction in the next couple of minutes. And then the next thing we have, well, I think we have the example right here in the screen, which is why we have the candles right here. We're going to enter the market, but we have a lot of examples to cover. But the problem we are having here is that we are actually running out of time. I guess maybe we should have minimized the topic so that we can actually cover a few of the topics. But now if we begin to look for an example, even though we can find an example right here, but the problem is that we would actually end up running out of time. But I think we have to get back to the market, of course. We have less than 12 minutes left, and we still have a lot to cover. So I think we will just rush to cover the topics, and then we will try our best to get some of the examples, and then you guys can see. 10 minutes left. That's terrible, and we still have a lot of information left to cover, and that is not looking good for us. But let me be real quick, of course. So here's the bullish engulfing, and here's the bearish engulfing. Something is wrong with my eyes. Now we're gonna move to the hammer. Now, when you saw a hammer is not that hard to find. But just like you hear the name a hammer, it looks exactly like a hammer, and that's why it is called a hammer. It has a small body near the top of the candle with a very long wick underneath it or beneath it. Okay, so whenever you saw something looking exactly like a hammer, a small body at the top of the candle and then a very long wick underneath it. And most of the times the hammer happens when the market is going in a downward direction and the market is reversing to move in an upward direction. When the market is beginning to move in an uptrend, that is when you have a hammer, and the hammer is actually representing that. It tells you price try to fall, but the sellers push it down, but then buyers rejected those lower prices hard and then drag it back up and then push the price even higher than it was before. Usually, when you saw the hammer happening, or when you saw a hammer in your chart or in the market, it usually means a bullish momentum. It is actually a bullish signal. And when it shows up after a decline, that is exactly when the market will actually begin to recover and then move in an upward direction. And so that is basically a hammer is representing a bullish market or a bullish momentum. But it depends on where the hammer appear, of course. But then, just like the hammer, now you have, it's not an upside hammer, okay? Just like some people call it, or a reversal hammer. That is not the name. The name is a shooting star. It is the mirror of the hammer, just like you can see it. Small body near the bottom of the market with long wick above that body. And so when that happens, well, it depends. Sometimes the market seems to it depends on the market volatility, of course. But I don't think that IQ or any other broker, for that matter, do not respect. It's just that when the market is stable, everything is clear, and when the market is unstable, things begins to just screw up. And I think whenever you saw the market being very unstable, it is I think this is very important that you brought it, even though we are actually running out of time. But I'll just tell you that whenever you saw the market misbehaving or behaving that way, it is the moment for you to leave the market until the market is stable. Then you can come back and take your trades. Yeah. So as I'm saying about the shooting star, just like the hammer represent a bullish momentum or a bullish market, the shooting star represent a bearish momentum or a bearish market. Because what happened is that buyers tried to push the price higher, and that's what happened. Just like I explained to you earlier in the live stream, that the candlestick represent a fight between the buyers and the sellers, where the buyers sorry guys, where the buyers actually push the market up, and then the sellers comes in and said, that's enough for you guys, you have your run, let's push the price down. So that's what happened. It is exactly like the hammer with small body near the bottom. Of course, the hammer is above, but the shooting star is below, near the bottom, and then you have the long wick above that body. And that's what happened, which means when the price has already go up, then the sellers push the price back, and then it closes with that small body, which you have the long wick, you have a shooting star, and it actually means that buyers tried to push the price, but it got rejected very hard by the sellers, and now the price or the market is beginning to move in a downward direction. Usually what happens is that it's going to be a bearish rally right after the shooting star. And I'll just try to see, even for just a couple of minutes, to go back and just show you these few examples, the ones that we can be able to find out. But then if there's no time, I think we would maybe move in the next live stream. It would be part 2 of the naked chart explanation video or live stream, of course. So you can come back to this to watch again and see what you didn't understand. But then what would happen, because we are actually, yeah, of course, we are actually running out of time. And so what will happen is that maybe we will have the part two, which we will continue next week on top of this live stream. So that would be the best thing to do. Yeah. So hammer, bullish momentum or bullish market. Shooting star, bearish momentum or bearish market. Now the next one is the doji. And so just like you hear the name sounds kind of doji, it is actually something as that. The market open and close between the opening and the closing looks almost identical. You can't differentiate the opening and the closing section. It is just a tiny, small, little body, just like you can see in the screen. It is just like that. And so what this means, this is a pure indecision. Just like you can see that, it means even the market cannot decide what's going to happen between this in this struggle between the buyers and the sellers. Neither side actually won. So the fight has ended up in a stalemate actually. So there's no clear winner. The buyers are not winning and the sellers are not winning. So neither side actually won that fight. So the fight end up in a stalemate. And the lesson here is patience. When that happens, it means even the market cannot decide or cannot be able to decide who will be the winner. So you need to be patient at that time and just continue to stare at the screen or to look at the market with clear and open eyes. Don't force trade when you see a doji. It doesn't matter what indicator you are using, but sometimes your indicators might be right, sometimes your indicators might be wrong, but the chart just never lies. So when the market cannot be able to tell you what exactly is going to happen, I think that would be the time for you or the moment for you to wait and to be patient and to wait for the next candle to show you who will actually win the fight. The indecision happened with no clear winner, with no clear victory. But then you have to wait for the next fight. And at the end of the next fight, if the buyers prevail, it means the buyers have now taken over. And if the sellers prevail, it means the sellers had already taken over. So when you saw a doji, just be patient and wait for the next candle. The next candle will tell you the clear winner. So that is how it works here. And now we're going to talk about the next, the last candle, which is the pin bar. So I want to say this is actually one of my personal favorite. So it is a long single wick showing a sharp, decisive rejection of a price level, sometimes open at a support or a resistance zone. Just like you can actually see it. It just depends on where the pin bar actually shows. Oh God, we are actually running out of time, and we still have a lot to cover. Guys, I think I don't know if we had to, because before we even finish explaining, we just have less than 1 minute. But I think, guys, just before we go, if tonight helped you, just make sure you hit the subscribe button and turn on the notifications. Turn the notifications on after you subscribe, so that you will not miss any new video or live stream from this channel. And make sure to follow the official IQ Option channels here on YouTube. Follow the IQ Option Education channel here, and then you make sure that you join the Telegram chat groups, IQ Option Global and IQ Option Africa. It is already time. The links are below, and if you haven't used the code, you can now use the code. You will get your $5 risk free when you use the code on IQ Option. And make sure to come back next week, where we will continue from where we stopped today. So the next live stream will be part 2 of this live stream today. It will be the continuation of this live stream, where we will cover the rest of the topics, and then we will dive into the chat and give you examples. I'll show you examples, and also I will keep your questions here so that when I come back, I will answer all of your questions as well, and then we will have the examples. And then if you have any other questions, you can then ask us live on the next live stream, where we'll actually I'll give you your answers directly so that we will not miss and we will not run out of time. But today, I genuinely thank all of you guys. I thank you all for spending your evening together with me and for spending 1 hour, which is incredible. And I believe this hour is going to be worth it if you use the examples and the information you have from this live stream. But this is this is exactly the kind of session I wanted to keep building with you, and this is exactly the kind of content and the live streams that I wanted to continue to do with you guys, because my goal and our goal, and even the IQ option, the whole channel and the whole team, the goal is to help you and the new traders and the beginner traders to understand the market and to win in the market and to become profitable traders, because that is when everyone wins. So don't forget to click the subscribe button and hit the bell icon so that you will get notified as soon as we go live again. The next live stream will be part 2 of this live stream today. So guys, join me on the next live stream. Until then, I will see you next. Thank you guys, and peace.